Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Thursday, November 5th, 2020. And our top stories today, we're going to dig into domestic U.S. and international commercial real estate. Joining me now to discuss this and more is Deidre Willard. She's the editor of MillionAcres.com. Deidre, thanks so much for joining us on the program again this morning.
Thank you. Always glad to be here.
Oh, it's amazing. Always love the amazing details you're able to provide on the real estate marketplace. Let's jump right in because I want to kind of split the show up into U.S. commercial real estate, and then we'll kind of look at international real estate. So what's the latest happening in the U.S. with people not working in offices? What's the impact there?
The impact has been pretty big. There's a real difference this year between the commercial market and the residential market. The residential market is booming. The commercial market has been much slower. Part of it is that a lot of people are waiting for distressed sales, and those aren't happening yet. But the newest data from Real Capital Analytics showed that commercial real estate activity was down by about 57% year over year. But the good news is that was up 37% from the second quarter. So we're starting to see a little bit more deal flow, which is very good news for commercial real estate.
So when we talk about, just in general, let's think about major cities, Chicago, New York, Los Angeles. At least in the asset management business, a lot of people are still working remotely. Are most of and we've talked in the past, you and I, about data centers, technology-driven real estate has seen growth. And I think we also talked, or maybe I talked with your former colleague, Dan Klein, about this with Google and Facebook buying up places in Manhattan. But what is the sentiment, at least from real estate, in commercial real estate, about some of these employees not going back to work, at least in the industry that I'm in, until we have a vaccine? And that could be in 2021.
It's having the most impact in New York. So right now, only between 10 and 20% of office workers in New York have returned to the office. So that has a huge impact. The other thing in New York that's that is also a big driver is that business at hotels in New York is down about 90% year over year. You're seeing a lot less business travel, and you're seeing both in New York, San Francisco, Chicago, you're seeing less office activity. And so that's having a huge impact on all sorts of businesses, really, because in those central business districts, there are many businesses that are basically there to serve the workers that come in every day. When they don't come in every day, the whole area is impacted.
Yeah, I mean, it's just economic distress in a lot of these major cities, forcing small business owners to close. And it really, we're talking about commercial real estate, but it really is all interrelated. Question, Deidre, we have talked in the past about people kind of leaving urban or fleeing or leaving urban areas and maybe going to more suburban areas, leaving big metropolises and going elsewhere. Maybe hopefully it's just temporary, but that's going to have an impact on your workforce. And so if you have employees that are working remotely and maybe they choose to relocate from the metro area in New York or in the metro area in San Francisco, in that area, to a more suburban area, either outside the state or inside the state, that's going to have an impact on how much office space you need. Is there any worry there from real estate developers and also people who lease real estate?
There's definitely some concern. One of the trends that we're watching is something that's called a co-primary home. So people are thinking of a second home or a vacation home not as somewhere they go for 2 weeks a year, but as somewhere they go, for months at a time if they can work remotely. So right now you're seeing a lot of that flexibility, but here's why I don't think this will last. Right now, it's a level playing field because most people are remote. But when you start having people be in the office and people be remote, then you start to see the advantages of being in the office. And so that's one reason that I think that certainly after we get a vaccine, but potentially even before, as offices get more safety protocols in place, you may start to see people go back to the office, and then that trend will shift that other way.
Yeah, I mean, I definitely think this is temporary. It may be a long period of temporary, but it's going to be temporary. People gravitate towards opportunity, and that seems to be in big cities and cities in general where there's more businesses. And so I would expect the exodus to eventually kind of reverse itself. I want to ask you a question, Deirdre, though, because, you know, has there been any thought, just given the COVID pandemic, maybe to the way that buildings are laid out? For example, we saw a lot of open space and people kind of working next to their neighbor. Does this give any pause to that, at least in terms of developing new real estate? Maybe we go back to having offices on the outside with cubicle type separation between workers, and we kind of go back to the way things were in the late 90s into the 2000s.
I absolutely think that that is a trend that people are looking at. Certainly, one of the concerns is having people next to each other. And also, you have that in the past few years, the goal has been to get the smallest square footage per person. So,
Yeah.
square footage per person in an office building has been trending down for years. That's probably going to change. I'm not sure how many we're going to see, but we're going to see more creative office space. And I think we may still see that sort of like hot desking approach, but the desks themselves will be larger and more spaced out.
Well, I know that at the Motley Fool, as an example, in the Virginia office, I think they have these desks that kind of move around and you can kind of
Yeah,
plug
we
them
do.
into each other. I don't know what you typically call that. Is that what is called hot desking? Is that what you're referring to?
Hot desking is usually the ability to go from desk to desk, so
Got it.
that you would come into the office and not have a designated desk. You would maybe sign up for a desk for the day. But mobile desks is also something that we could see as people sort of try to figure out what the new office flow should be like. And so another concern is meetings. Traditionally, you get a bunch of people in a small enclosed room. That is probably going to change. We've all become accustomed to Zoom and things like that, and so that may continue even when we're back in the office, just for safety.
Yeah, I could see maintaining the mask, maybe wearing those face shields. I just can't see, you go to some of the supermarkets or some of the stores and they have plexiglass up. I think that would be, maybe that will be something that people will think about. But you talk about business, and a lot of business is done, as you mentioned, in a collaborative way. And I just can't see, business transforming that much. I mean, I think that as we talked with your former colleague, Dan Klein, about, there are tech trends that are here to stay. But I definitely think that, collaboration, the humanity aspect of this, we have to get back to that. And so I think that if you're a commercial real estate developer, maybe you're putting your projects on hold, but you also, maybe not all of them, but some of them, in the hopes that you're going to wait till when things come back and maybe the cost per square footage goes up. I'll give you the last word on this, and then we'll go to a quick break.
Yeah, absolutely. We definitely see some pausing, certainly around hotel projects, some pausing in office, but also you have to remember that a project will take 3 or 4 years. So depending on the project, this is a great time to actually move forward. But one concern also is even construction sites have to be socially distanced these days. So we're seeing in construction itself, bigger reliance on technology, more concern around keeping workers spaced out and not being in enclosed spaces together.
Yeah, I worked as a helper on construction sites there in my early years, and it's kind of hard to hold up something for your buddy while he or she is screwing it up into the wall if you're 6 or 10 feet away. But I guess that's where technology comes in. Well, Deirdre, I want to go to a quick break. When we come back, we're going to talk about international commercial real estate. We talked about the U.S. Now we're going to talk about what's happening in some of the other parts of the world. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate copays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back this morning. We're talking to Deidre Woolard. She's the editor of MillionAcres.com. Deidre, thanks for staying with us this morning.
Thank you.
So we talked about what's happening in the U.S. in terms of commercial real estate, and it looks like deal flow is pretty decent, and there's been some uptick. But let's talk about what's happening internationally, because the reaction to COVID obviously varies country to country. What can you tell us about some of the international deal flow as it relates to commercial real estate?
Well, deal flow all around the world has been down this year, but Europe has actually outpaced the U.S. this year, which is the first time that's happened in a long time. Of course, parts of Europe are headed for a second lockdown as we're taping this right now, so that is obviously going to have an impact. One of the things that was interesting is how fast China has rebounded, and China, real estate in China is pretty strong right now. But overall, this is just a down year. This is a subdued year, and in many areas, also you have to look at the impact of international travel and the lack of travel, the lack of there's decent domestic travel now, but international travel is still at a standstill in most of the world.
Yeah, because they don't want people coming in, whether they're workers or tourists, coming in and possibly infecting or bringing, or vice versa, bringing an infection back to their home country. So it's understandable. Deidre, is it the same? What we talked about data centers. We talked about other office space that during the pandemic in the U.S. has been kind of more of the trend. Is that the same with Europe and Asia and India and other places where you're seeing a lot of investment in these tech centers, people going to the cloud, a lot of virtual?
Yes, definitely. The rise of 5G is huge. So one of the things that is big, both here in the US and also internationally, is the creation of cell towers and the building of networks. Depending on the country, there's still a lot of work to do to bring to deliver solid 5G. So that's a lot of the activity that we're seeing right now. But yes, data centers are huge. Industrial is also big. It's big in the US. It's equally big in other countries. One thing that we're watching is cold storage. We've all learned more about the supply chain, I think, this year. That's true internationally as well. And the other thing that is a huge trend is life sciences. So especially in India, in China, life sciences is a huge, huge market. An example of this, Blackstone recently created a $7.5 billion fund to invest in life sciences. I mean, that'll be in the US, but perhaps also internationally. So that is a fast growing market. And just because I think we're all a little bit more aware of how important medical research is right now.
Oh, I mean, it's at the top of the, it's the most important thing for 99% of the world. Deidre, when you look at these, I don't even know if you can call China an emerging market, but let's just kind of loop it into an emerging markets or whatnot. But a lot of companies went to these foreign countries for a little bit lower wage cost, lower expense, and they made significant investment in these commercial real estate investments into building offices, as you mentioned, with life sciences possibly being a trend. Would you expect that to continue post-pandemic? There's still the great labor opportunity there, and that will bring in more people into the global economy. But would you expect more buildings to be built in India, in China, and elsewhere?
I would say yes, but I think we're also looking at a question of are some countries going to be less interested in globalization? So that's a trend that's happened this year, partly because of the pandemic and partly because of political situations both here and elsewhere, is there has been a little bit of a shift away from that will probably change. One of the good things about the pandemic, if there can be a good thing, is that it is forcing different countries and different companies in different countries to work together, because this is a global problem and it really needs a global effort for us to come out of this.
One question I wanted to ask you, more of a financial question and banking. If you recall back to 2008, a lot of write-offs around residential real estate. And I'm not sure, maybe there were some around commercial real estate as well. And that really got, the banks had to write off that debt. They weren't going to get paid. Some of those residences, a lot of those residents were foreclosed because they were taken on by the bank and they were just written off. Do you expect or have you seen, as a result of some of this commercial real estate slowdown, a similar situation could occur where you have write-downs, where you have banks saying, all right, we got to get this off our books. It's going to impact our earnings. It's going to impact our ability to make profit.
Absolutely. This time it's happening much more in commercial than it is in residential, obviously, because the residential market is still so strong. It's not happening a lot in commercial, but the interesting thing is that there are a lot of companies who have amassed a really strong amount of capital waiting for these opportunities. Prices haven't fallen yet, so there isn't that move, but the potential for distressed assets is pretty strong. You look at the hotel industry, some reports say that as much of a third of hotel loans could become distressed. So that could have a huge impact next year. So that's really something that is a concern, but that those capital funds that are right now sitting there with lots of money waiting for those opportunities. The one reason that this financial crisis is different than the last one is this has been such a slow process. There's been this opportunity for businesses to kind of seize those moments and get prepared. So it should happen very differently. No one's being caught on their heels this time, but they are looking for opportunities, and some of their investors are actually getting a little frustrated, thinking that there were going to be a flood of distressed assets out there to snap up, and they're not there yet.
Yeah, well, not there yet, and I guess we'll have to see this all how it plays out. Look at banking earnings. Last question, Deirdre. I know I've been asking you a lot of questions today, but this is such an important topic. I know you love it, and I love it too, and I think the audience does as well. Let's talk about real estate investment trust and any thoughts there about, obviously in the short term, maybe a little depressed in certain REITs that are focused on, for example, hoteliers and other places. But what's the long-term prognostication? What's the long-term future of some of these REITs? I mean, it's a rebound at some point?
Oh, absolutely. And it's really very sector by sector right now. So it hasn't been a great year for real estate investment trusts just because of all of these foreclosures. I'm sorry, not foreclosure, the closures and the
Sure.
shutdowns. But those are starting to reopen. We may see a second close. It's hard to know at this point. But we just got done mostly with Q3 earnings, and a lot of REITs did really well. You look at a company like Prologis, which is industrial and warehouse. Amazon is one of their biggest customers, so they're doing well and trying to figure out how to buy more real estate. Data center REITs are huge. Certainly some of the retail REITs are having trouble, especially mall REITs, but then you look at REITs that primarily have sort of more essential businesses like a Walgreens or a FedEx or something like that. Those are still doing well. They're rebounding. Rent collections have been much higher. So overall, it's not a great year for REITs, but we are seeing really strong signs of recovery in those Q3 earnings.
Yeah, like anything else, it's just a matter of what sector you're talking about and where your interest lies.
Absolutely.
Deidre, always a pleasure chatting with you. We could go on for hours.
We could.
Unfortunately, the tape's going to run out.
Exactly.
Actually, we don't typically tape with tape, just so everyone knows. It's all electronic and digital, but we still use the old anachronism. So, Deidre, always a pleasure chatting with you. Thanks so much, and we'll talk to you again very soon.
All right. Thank you so much.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Then drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, so much more, check out our daily newsletter, The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you're tired, for the same.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.